close for Amazon as the company reaches $2 trillion in market cap for the first time. That move helping the NASDAQ to outperform today, up about 0.5%, closing higher. But let's bring in our market panel. Joining us now is G Squared Private Wealth CIO and CNBC contributor Victoria Greene and Ariel Investments Vice Chairman Charlie Bobrinskoy. Great to have you both here. Victoria, I'll start with you. Amazon, $2 trillion club. Where does it go from here?
To the moon. It's just a pit stop on the way to 3 trillion. They'll be there in no time at all, the way the market's moving. But seriously, this stock has so many revenue components and they continue to add to it. AWS ads was 11.8 billion last quarter. And then today they're releasing that new low cost direct from China to compete with Temu and Shein. And so they're continuing to look for new revenue streams. I see the stock is not going to be exponential like Nvidia, but slow and steady, continuing to grow revenues. And with the AI lift, both internally as well as on AWS, you know, they described it, that AI is being built on AWS. Basically, everybody is going to utilize it. I see this as a stock that has continued upside, and it's one of my favorite plays, long-term hold in the discretionary space. Absolutely. I think this is, again, just a pit stop on the way to 3.
Okay. And of course, speaking of AI and reads on AI, Micron earnings are out. The shares are sinking right now, down about 10%. We're going through the numbers. We'll bring them in just a moment. In the meantime, Charlie, yes, Micron, the expectations are very high going into this print, so we'll see what those results look like. But other parts of the market perhaps have had more value to be had, given the fact that the major indexes have moved higher, but there's been a lot less activity for the most part in recent weeks under the surface.
Right. I mean, obviously, you've said it many times, Morgan, that this is a market that's led by a very few number of stocks. If you look at an equal weighted index, the results are a lot lower. And obviously, the names that I've traditionally loved to recommend, value stocks, are kind of chugging along up a little. A lot of the value indexes are up mid to low single digits. So there's a lot of value to be had. I wouldn't say that it's in Amazon and Nvidia, but it's hard to get in the way of those kinds of names. But lots of more industrial names, consumer discretionary names, even banks and financials trading at attractive levels.
Victoria, the S&P has just been sort of chopping around at this high level, near record levels, but the stocks underneath have been moving around a bit as well. What happens when we get the latest inflation read a little later this week? Is that, you think, going to shake things loose? Is there any way in particular you're positioned ahead of that?
Yeah, I think it's going to be a good print. I think it should be, if you look at the components, we're thinking it comes in flat, headline flat month over month, and then, you know, a nice little reprieve there in core as well. Income likely still grew strongly. I think it's going to be a good print. Markets like it. I think the Fed's going to continue to remain a little defensive, leave their options on the table, higher for longer. But PCE likely looks like it bumps down this month if you kind of look at some of the underlying data. I think that's a good thing. We want to see this lift and broadening out of the market. We want to see some more value participation and see other sectors, but I think you're going to continue to see growth run, infotech run. If you're looking at the scorecard, about infotech is the only sector beating the S&P 500. You are seeing a lot of churn underneath the surface there at the other 493, as we like to call the S&P now.